Business Focus with Kudzie, Sharara on the Champions League Breakfast.
Good morning and welcome to Business Focus right here on Capi Talk. As always with Kudzie, Sharara. Good morning to you, Kudzie. How are you today?
Good morning, Tinashe. Good morning, everyone.
All right, so the Zimbabwe Stock Exchange gets listed on its bourse today. It's a major milestone in the local market. And of course, to help us unpack what this really means and share some insights is Tapiwa Muronzi, who is a senior corporate advisor with MMC Stock Brokers. He is joining us on the line. Good morning to you, Tapiwa, and welcome to Business Focus.
Good morning, Tinashe. Good morning, everyone.
Thank you so much. All right, let's begin. The Zimbabwe Stock Exchange is self-listing. And by way of introduction, what does this term really mean?
Thank you, Tinashe. So, as the first point in call, I think I need to state a disclaimer that I'm representing MMC Capital. We were the stockbrokers of this transaction. Secondly, as MMC Stock Capital, we also own shareholding in the ZSE holdings that's listing today. So I think getting into your question, the first question that you asked was self-listing. So self-listing is a process whereby an exchange lists on its own exchange. Unlike on the exchange, we have the likes of OK, Nampec, TSL, Tigere, Delta. But in this case, it is ZSE holdings that's listing on the ZSE. I think this is a general trend that we've seen in the region. We have Dar es Salaam Stock Exchange, there is Nairobi Stock Exchange, there's ZSE Stock Exchange, which are also listed on their own exchange. So to ensure that there is compliance, the regulator, SEC Zimbabwe, Stock Exchange Zimbabwe, is the one that's monitoring the whole process of ZSE being listed on its own exchange. Thank you, Tinashe.
And by way of introduction?
By way of introduction, so when you talk of introduction, it is when a company is going to list on exchange. So in this case, there are no funds that are being raised via an IPO or a private placement. So ZSE is going to start to list today. What it did, it was a Father Christmas. It gave shareholders to some of these heavy users who were on ZSE Direct and VS Direct were also given shares. So it's going to list by introduction without raising any funds from the investment community.
Thank you, Tapia. So why is it important that the ZSE gets listed, and what difference does it make from the current arrangement that we have seen where it has been operating over the years? What's the difference now if they get listed?
Thank you, Kudzie. So the difference now, I think there's a need to explain a bit on the history that has happened over the years. So ZSE is the second oldest exchange that's there. It started trading in 1894. So over the years, it was more of a society of members. So in 2010, government, when it realized that other societies in other industries, in the insurance industry, in the other industries, they were starting to demutualize. There were laws that were enacted to ensure that stock exchange, we saw the demutualization process starting to happen, whereby the members of an exchange in the government of Zimbabwe were given shares in ZSE holdings, with government being given 32% shareholding, talking brokers getting 1.7%, and the members stock brokers about 0.88% shareholding. So zvadaro vamwe vanoti hanzi kana waenda kumba kwemunhu munhu akakuti hanzi yauchi sadza iye ukaona asingadyiwo chi unofanira kuita sei unenge wakutya kuti chinyi chiri kuitika. If I'm also to quote Justin Wade, he said they should eat their own dog food. So what is doing now, ZSE, it's now becoming also listed so that the owners, the current owners, the stockbrokers who issue different recommendations, who solicit investors in the public start to invest, who actually start to benefit from the listing. So the benefits that are there is that the shares of ZSE holdings are now becoming liquid, that even Beangwe Kwaseke can now start to buy shares of ZSE holdings by it being listed. Secondly, the ZSE can now start to use its own shares as currency in transaction. I think previously in 2023, we saw Padenga acquiring Dalagio, a mine asset, via issuing shares. We've seen Tigere acquiring a property worth 11.8 million using its own shares. So these are some of the advantages which are going to be bring to the current ZSE holding shareholding.
All right. Thank you so much. 13 minutes before the news at 8 is our time. The Zimbabwe Stock Exchange gets listed on its bourse today, and we are speaking to Tapiwa Muronzi, a senior corporate advisor with MMC Stockbrokers. So, Tapiwa, you recently shared insights of the Zimbabwe Stock Exchange holdings ahead of today's listing and gave it a buy rating. What would you say is the investment case, Abba?
So the first investment case, I think ZSE is a monopoly in some regard. So in a strategic market position. Secondly, ZSE Holdings, it also owns VFX Stock Exchange. That's the first financial institution which has been registered in the offshore center. ZSE has got stable, low guided revenue streams. I think if you look in the SI 218 of 2022, you see how ZSE generates its revenue by giving issuers. Thirdly, ZSE Holdings is a constant dividend payer. Over the last 3 years, 4 years, it has been paying dividend to its different shareholders. So, Izusema Analyst normally at power, we need to have our backing backed by evaluation methodology. So, we have done a valuation via different methodologies that we've done, and we come up to a fair value of around 18 million. And I think the scenario analysis that has been done, given that there are different currencies that are operating in our operating environment. And we believe that as MMC is our house view, 13.5 billion is that ticket size of the ZSE Holdings.
Interesting there, Tapiwa. And you also, the ZSE, like you said, ZSE is some kind of a monopoly, and it actually controls 98% of Zimbabwe's listed equity market. But how sustainable is this dominance given regulatory shifts and potential competition from FinSec, which is the Financial Securities Exchange, which is another exchange that we have in Zimbabwe, although it is an ATP at the moment?
I think you could. So what we view like is, firstly, ZSE has been trading, like we said, since 1894. So it is a huge track record of it performing its purpose. I think on the ZSE, you've got companies like TSL, who were listed in 1957, the likes of Delta, which listed in 1946. So this track record in itself is a plus to ZSE Holdings, and it's one of the reasons why we think it will continue to maintain its market share. Secondly, there's issue of innovation. ZSE has been very much innovative. As you have seen, it's now registered on the Swift platform. Thirdly, the exchange is also very liquid. If you want to dispose, let's say 100,000 in the trading session today, I'm sure you'll be able to dispose that package on the ZSE. So we believe that this gives it a trading advantage over the FinSec, where you have Old Mutual Zimbabwe, the green shine listed there.
Mm-hmm. Tapiwa, according to reports that do come up from the Zimbabwe Stock Exchange, 84% of revenue comes from listing fees tied to market cap. How vulnerable is the Zimbabwe Stock Exchange holdings if the current undervaluation persists?
I think it's natural for that question. So listing fees are just to educate the listener. Listing fees, these are fees that are paid by different issuers which are listed on the stock exchange. I'm sure we've got a lot of EcoCash and among other 72 listed entities that are there on the exchange. So they pay at the exchange a certain fee of them being listed, which is determined by their market cap on a quarterly basis. So if the current undervaluation persists, we view that the ZSE has been profitable at these current levels. But however, it still remains very depressed. We think that there's going to be a revaluation going to the future. We see if it becomes a Swift platform, you see that foreign investors will easily start to increase their buying activity on the exchange, which will actually cause unpricing or repricing of shares, so that it becomes fair value, and ZSE will start to generate more revenue in its day-to-day operation.
All right, thank you so much, Tapiwa. We've got a question here coming up from one of our listeners on our WhatsApp platform. We're saying that the self-listing of the Zimbabwe Stock Exchange, won't this be a conflict of interest, being the referee, a player, and VAR at the same time?
Yes, Tinash. So I think nyaya yekutonetsa pairi kubvunzwa ndeyekuti iwe kana uri class monitor unozozvinyorawo here pamanoise makers vanobvunzwa naticha vamwe muchiona vanoti nyoka huru haizirume. In this case, ZSE Holdings listing process here was being monitored by their regulator, which is Security Exchange Commission of Zimbabwe, which was ensuring that ZSE is compliant with the Act of Parliament, which is COBE Act, and SI 134 of 2019, which fixed the listing rules. So that Security Exchange Commission is the referee in this transaction.
Yes, thanks for clarifying that the Securities and Exchange Commission will then step in to regulate the Zimbabwe Stock Exchange. Now, Tapiwa, your report, the investment insights that you shared with your obviously your clients and the like, argues that the exchanges, that's the VFX as well as the Zimbabwe Stock Exchange, which falls under ZSE Holdings, are undervalued by roughly 50%. What catalysts could trigger a re-rating? Are we likely to see a re-rating anytime soon?
So a re-rating would be what we believe in is MMC stock brokers. I think we are the only broker where you find multiple different talents of people that are working there, engineers, lawyers, and we've got financial experts. So whenever we are having this, issuing our sell-side research, there's actually a robust discussion that happens there. A re-rating, I think, if you see GDP growing, as you have seen on the ZSE, there are key companies that are there which indicate the key performance of our economy. But the likes of Delta, the likes of Insco that are there. So if we see that there are indications of the GDP growing, if you see that there are quarterly trading updates or their full year financial results are speaking to an increased GDP, definitely we are going to change. Then there's also an issue of increased dividends. I'm sure investors have seen that whenever Econet started paying its dividend, its share price also gained its value. So if we see that the trend that's currently happening, if the increase in dividends continues, we believe that the stock market will actually start to reprice. And there are also key events that will happen on the stock exchange, be it coming from monetary or fiscal policy, which may cause our re-rating. And we have seen an increase in shareholder activity on the foreign exchange, on the VFX. Foreigners are starting to dump on that exchange. So if that continues, I'm sure it will definitely issue us to want to re-rate and give it a higher valuation.
6 minutes before 8 a.m. is our time. We are speaking to Tapiwa Muronzi, the Senior Corporate Advisor with MMC Stock Brokers, unpacking to us what this really means and sharing some insights on the Zimbabwe Stock Exchange, which gets listed on its bourse today. So, Tapiwa, you note reduced investor confidence and institutional net selling. What concrete steps can the Zimbabwe Stock Exchange Holdings take to reverse all this?
I think for that to happen, in terms of investor confidence, there are two ways of looking at it. The exogenous factors, which are factors which are outside the management control, which are issues to do price stability, investor confidence, which the monetary policies are trying to address via that. Secondly, in terms of investor confidence, we have seen some of the good indications of things that are happening in our economy, which we believe that it will boost investor confidence. I think, first of all, we saw that black farmers were given back their title deeds. Secondly, we have seen RBZ giving back diamonds that were taken from one of the investors in 2011. So those are some of the indications that are happening from an exogenous factor, which are factors outside the management control. Then going to management control issues, we believe that management should control lobby for the causes of its issuers and investors which are there on the exchange. I think they've done well in terms of reducing the CGT tax that's charged on the exchange, but definitely more still needs to be done by the Zimbabwe Stock Exchange. Then secondly, there are also issues to do with hedging behavior that we've seen amongst institutional investors, where they are now starting to invest in other asset classes, be it interest-bearing securities, be it private equity, be it property. We believe that ZSE Holdings can actually start to push and talk to its federal regulator, IPEC, regarding how asset management fees are calculated. Instead of different asset classes charging asset management fees differently, there's need to unify how this charge is. This creates a bias amongst institutional investors wanting to invest in different type of assets. Definitely, thirdly, I think the ZSE Holdings needs to continue engage in the investment committee. We've seen Kandege kakatambiri kumumozuko, and think the speculative behavior that they do can actually be brought to an exchange. But yes, in the long run, company fundamentals is what really determines the price on the exchange.
Thank you, Sense, on that one. There's a question that is coming on via our WhatsApp channel, and the question relates to quite a number of companies that get to delist. Some of them that has been mentioned is Trust Holdings, right? Tinashe? Trust Holdings is one of Trust Bank is one of theirs. Another one is Kotko. Kotko is still though not entirely delisted, but it's not trading. And the question there is, what happens to the shareholders that own those shares? Especially, I think the question relates to the minority shareholders.
Thank you. So as minority shareholders, what you're owning part of a company that's being listed. So long you're a shareholder in that company, so long if you're a shareholder in Kotko, you are still a part owner of that shareholding in Kotko, which is currently not trading or true with. So what you need to do, you need to follow your shares via your transfer secretary and give you the current update of what's happening within the affairs of your company. Because if you're a shareholder or part owner of the company that's being listed on an exchange.
All right, thank you so much for that, Tapiwa. How do hawkish monetary policies and banking restrictions directly suppress trading volumes and market cap?
Thank you, Tinashe, for that question. So whenever we're talking of hawkish policy, we are just talking of reduced money supply that's there in the economy. So whenever money is also a commodity, whenever the money supply is also reduced, it also causes the interest rates to become high. And whenever the interest rates are high, investors will start to prefer to want to invest in other asset classes that are giving them return. Secondly, equities being a very liquid asset class, you also see some desperate people who are going to take some equities just to raise the liquidity that's needed for them to pay QPDs. So that will cause forced sellers on the exchange, and normally forced sellers, they will sell their shares at a very undervalued. So if this persists, you will see that the valuation of companies that are there on the exchange will be poor. Then going on to banking institutions, I think in the year 2000, historically, and if you have to see in the big economies, we've got Goldman Sachs and JP Morgan, they're also dump in the capital markets. So banks, they've got a huge balance sheet. So if they're given an opportunity to start also investing part of their assets on the ZSE or on other exchange, we believe that this will also cause a buying pressure on the exchange, which will ultimately cause the stock exchange to start to trade closer to its fair value.
All right, thank you so much, Tapiwa Muronzi, the Senior Corporate Advisor with MMC Stockbrokers, for unpacking to us what really this means as the Zimbabwe Stock Exchange gets listed on its bourse today. Thank you so much, Tapiwa, for talking to us here on Business Focus. Have yourself a great Thursday.
Thank you, Tinashe.
So there's a lot that's going to be happening in the world of business, Kudzie. So do you think this will come as a positive move?
I think it's a positive move. Yes, the market is currently flat, but that's the time to be accumulating shares, and also that's the time to be developing new products. By the time things start to look up, I think we'll have so many developed products. I know there are derivatives that are in the pipeline, commodities exchange that is in the pipeline, and so many other developments that the ZSE is working on, including the prospective issuer training program. I think we are setting the base. When things start looking up, then we'll have the products to invest in.
Great. Thank you so much, Kudzie, for Business Focus for today. Let's discuss more tomorrow.
Thank you, Tinashe.
Business Focus with Kudzie Sharara on the Champions League Breakfast.